Well, good morning and welcome. You're watching Buy Now, Sell Now on ET Now. I am Harsh Saita. With me is Vinny Motiwala. Over the next hour or so, of course, we'll have a couple of managements lined up, but after that, we'll take in your queries as well, and we'll quickly have our experts answer those queries for you. But very quick check on the markets. You're seeing around a 0.25% decline on the Nifty. Vinny, what we're seeing largely is though that the mid cap and the small cap indices are doing quite well for themselves today in the green, nonetheless, despite the benchmark really not doing so well.
Absolutely, and Harsh, yesterday also we saw this similar trend coming in, is where the mid cap and the small cap actually had been outperforming the benchmark indices as well. So that is very interesting, that mid cap, small cap space continues to outperform the benchmark indices. Now let's look at sector wise, what is doing well. Let's pull up the charts for the banks. What are they doing? What is Nifty Bank doing is a one to watch out for today. Nifty Bank, nothing exciting there, down almost 0.5% on trade, and obviously that's been a drag, and that is the drag coming in on the indexes as well. So Nifty Bank is down. We're seeing Nifty Pharma not doing anything exciting as well. Nifty IT2 trading in the red as well. So let's keep an eye out on that. Other than that, we have the Nifty Realty and the Nifty Energy. That is among the top gainers. That is pulling up the markets as well. Realty and Energy, which are seeing good gains coming in of more than 1% as well. Individual names and individual movers that we're seeing in the stock price as well. Harsh, we have Intellect Design. I beg your pardon, excuse me, is in focus on the back of its numbers as well. We have, other than Sundaram Finance Holding, which is in focus, Ajanta Pharma seeing strong gains today in trade as well, up almost 7 to 8% in trade. Alembic Pharma among the top gainers as well as Fino Payments, that's up almost 11% as well. Harsh, but we are joined by the management of Symphony. We have Anurupesh Shah, Executive Director, joining in with us as well this morning. And thank you so much, Mr. Shah, for joining in with us. And obviously, Mr. Shah, when we're looking at your numbers, Q1 obviously would have been an impact coming in because of the unseasonal rain that impacted the peak season that comes in for the company. Now, could you just tell us what is the early indications that have picked up in the terms of demand trends that you're seeing in Q2? It's off season, but what are the signs that are indicating right now?
Thank you. First and foremost, to give some highlights of our Q1 performance, even though despite unseasonal rain and overall industry degrew, entire cooling industry degrew, we have increased our market share as on 30th June. That's number one. Number two, despite YOY degrowth, our June quarter sales has been second best June quarter top line sales, higher than any of the June quarter sales pre-COVID summer. Number three, as we have also now ventured into several path-breaking innovative products, including products which sell round the year like Surround and Duet, etc. That is adjacent category. Apart from LSV, they do sell round the year. And finally, our off-season collection up till yesterday is marginally lower than last year. So first quarter performance is no way the indication of, on a standalone basis, the full year performance. We do expect decent YOY growth in top line as well as profitability.
Right, Mr. Shah. Obviously, you're expecting a decent growth in top line and profitability going forward in the whole year as well. You've highlighted some off-season products of yours as well. But, Mr. Shah, also I want to understand in terms of anything on the inventory levels that you are seeing. What is it that we could expect in terms of inventories? Is there a build-up in terms of inventories due to this weak demand sentiment that was there in Q1? And how is the channel behavior actually shaping up given this inventory? And okay, if you could tell me that first.
As far as inventory at a company level is concerned, or as far as our OEMs are concerned, it is absolutely normal. Having said that, coming to the channel inventory, obviously, with some of the distributors, especially in some parts of northern India, as well as in central India, they do have some high inventory. In most other parts, inventory is almost normal.
Where should one see margins shape up given all of this environment and everything that's happening? where should margins for FY24 be at?
Margin for FY24 on a standalone basis as well as on a console basis, it should be in line with or better than what we registered in 22-23. As I said, Q1 is not the reflection of entire year performance, whether on a standalone basis or at a subsidiary level. As you would have noticed in subsidiaries, margin and performance have been far, far superior. Neither that is the reflection of the full year, and so is Symphony India. So certainly the way in which we have strategized in terms of the product, value engineering, many aspects, top line wise as well as profitability wise, including EBITDA margin percentage should be superior to what it was in 22-23.
Understood. But, essentially the question will be how much superior, right? If it's going to be largely just a 0.5% here or there, or whether we can see or whether there is scope to see a larger margin expansion in FY24.
We believe that there is a scope of the larger margin expansion. How much? I'm not in a position to quantify or specify that.
Okay, Mr. Shah, thank you so much, for joining in with us this morning on ET Now and giving us an understanding on what we should be expecting from the company going forward as well. Thank you so much. But that was the management of Symphony for you all. Not much of a worry. Q1 does not indicate in terms of the whole year how we should be expecting the growth for the company. Let's move on and bring on board another management, and we have the management of Gavi Power joining in with us, Mr. Dinesh Gandhi, Director of Gavi Power and Ispat this morning. Thank you so much, sir, for joining in with us this morning on ET Now. And numbers, that's what we're going to start talking about as well. Numbers have been impacted on a year-on-year basis this time when you look at it due to the lower volumes and the fall in realization. So do you believe that the worst is over in terms of the demand impact and now that is behind us and that we could actually start seeing a volume uptick in the coming quarters for the company?
Thank you for having me on your show. See, if you compare the number on YOY basis, the FY22, till June was an exceptional period when the iron ore prices in the global market was very high. And therefore, the numbers are not comparable on normal basis. If you compare on a, last 3-year average, then we are doing much better than what we did in the FY21 on a comparative basis. And our volume in the current quarter, especially in the pellet, has gone down because of the maintenance shutdown which we had taken in the plant. So going forward, whatever volume loss which we did into one quarter will be covered in the next 3 quarters. So our volume on year-on-year basis will be in line with our guidance.
Right,
and,
sir.
Yeah, and if you see our performance on quarter-on-quarter basis has substantially improved. Our EBITDA has increased by 36%. Our operating margin has increased by 23%. So, overall company is doing much better as compared to a quarter-on-quarter basis. But, the last Q1 of last financial year was an exceptional quarter.
Harsh also joining in. There's been a sharp increase in global iron ore supplies, right? Plus, there's also been lower than expected demand pickup, especially from China. Now, how does this impact the overall outlook? China's policy support to housing, infra, do you think that will spur iron ore consumption? How should one look at it?
See, so far as India and China consumption and the global market supply is concerned, so far as Indian prices are, competitive as compared to the global markets. But in case if the global market prices go up, the prices in India will go up. But if the global market prices go down substantially, there is a benchmark of Indian pricing because of the auction of mines which has taken place in 2020. March 2020. So the iron ore prices in domestic market is more or less at a lower band of last 2 years. So we don't think that excess supply because India is not importing iron ore and the landed cost of iron ore, if imported India will be higher than the domestic prices.
Right. So when I'm looking at it, your margins have seen a contraction on a year-on-year basis. Now, how have the raw material prices trends been across the segments, and what is your outlook in terms of the spreads in the coming quarters as well then?
See, so far as iron ore prices are concerned, we are not. So iron ore is there are two major raw material. One is iron ore. Iron ore we are not impacted because we have a captive iron ore mines. So our margins are impacted by the volatility in the finished product prices. But definitely the coal prices have definitely gone down, and coal prices have gone down more than 40%. So the impact of the coal prices reduction will come in from Q2 onwards. But at the same time, the finished product prices have also gone down. So we hope to maintain the margin at current level in the going forward in the current financial year.
Right, so and you've achieved nearly 30% of your guidance for sponge iron and rolled product segments. How should one look at your FY24 guidance in this context, especially with regard to other segments? Are you also confident of meeting your overall guidance for FY24?
We are confident of meeting our overall guidance in terms of the volumes. But when it comes on the pricing, it depends on purely on the market conditions and the volatility in the pricing. But volume guidance, whatever we have given, we are confident of achieving the same.
Right. So I also wanted to understand what your current cash position is. You had around 800 crore of cash at the end of March 23. What is your current cash position? What are utilization plans? And how are capex plans really playing out in all of this?
See, our cash position is approximately around 500 crore as of now. We had 800 crore in March, but then we did, buyback in the month of April. So about, some cash was utilized there. And going forward, in the current year, our capex plan is very normal, more than, about 150 to 200 crore for maintenance capex. But our major capex will start once the environmental approval for pellet plant and the integrated steel plant plus the mining expansion is received. So till then, in the current year, and the capex will start only after the approvals are received. Our current year capex will not be more than 200 crore.
Right, sir. Thank you so much, for joining in with us and today on ET Now and giving us an understanding of what we should be expecting in terms of the company, in terms of the capex plans as well. Thank you so much, Mr. Gandhi. That was the management for you all of Gavi Power and Ispat. But on that note, viewers, we're going to sip into a very short break. But once we come back from the break, we will be taking all your stock-related queries. So get started and send us all your queries on the WhatsApp number that will be flashing on your screens. Welcome back, and you're watching Buy Now, Sell Now on ET. Now, this is a show where we solve all your stock-related queries. And if you don't know and you're tuning in for the first time, we will be taking your stock-related queries. So you can send us those queries on the WhatsApp number that will be flashing on your screens, or even on any of our digital pages like Twitter as well. So do get started and start sending all your stock-related queries. We have our experts joining with us today. We have Avinash Gorakshekar joining with us, as well as Kunal Botra, who will be taking and solving all your stock-related queries. A very good morning to both of you as well. And Kunal, I'm going to start with the first query that is coming for you today, and that one is on JK Lakshmi Cement. We have the viewer who's holding it at a price of 706 rupees per share. They want to know whether to sell or continue to hold this one, and would request viewers also to start sending their names so we know who is it, who to address it to.
So I would suggest to sell the stock at current levels. It's been an underperforming name. 2022, the stock hit a high of 850, and from there it's been going through a process of drag. The correction has now made the stock come back towards the 640-50 mark. So I believe at current levels also the chart patterns look a bit more weak. I'm not sure whether you'll probably find an immediate bounce into the stock price, because even the markets are going into a bit of a risk-off mode. So I think in that aspect I would suggest a sell or an exit.
Right. Avinash, we have the next query coming in from Rao. He wants to understand what your view on Elecon Engineering is. Whether the current market price is a good price to enter the stock from a long-term perspective. He's looking at a 3 to 4 year time horizon for his investment.
Yeah, I think good morning to you. And see, Elecon Engineering has produced very strong numbers for FY23. And the management commentary has also been very positive. In fact, they have a very large order book, so that gives them revenue visibility for the next 12 to 18 months. The stock has risen quite significantly. So I think if the investor has a 2-year kind of time frame, he should look at accumulating the stock on any market decline. I think clearly we believe that earnings growth trajectory over the next 2 years could be very solid. We could see 25 to 30% kind of earnings growth levels. And this definitely could re-rate the stock even further. But I think you need to give in a lot of time and patience to stay invested here. So I think if the investor wants to take a long-term view, he can definitely buy at current levels and accumulate even at lower levels.
Okay. Kunal, this next query is actually on a PSU Bank ETF index. We have Akshay from Bangalore who wants to know what is your view on the PSU Bank ETF index for the next 15 to 18 months? Is it going to be giving a breakout after a while, they are saying? Could you just give us an understanding on that?
Well, yeah, I think of course the PSU Bank ETF will also mirror the movements of PSU Banking Index. But I believe I think I've been pointing out this regularly over the last couple of months that I'm extremely bullish on the PSU banking prospects for the next 1 to 2 years, and if not more, for the entire index. So I think it's a good strategy to try and trade into or invest into this ETF. I would believe that in the next 12 to 18 months, since query specific towards the breakout, I would expect the breakout to happen for the PSU banking ETF as well. So I would expect this ETF to perform quite well for itself. Would suggest a buy as well as a hold.
Right. Now I'll quickly move on. We have Bharadwaj from Coimbatore. Has 220 shares of KRBL, average price at 236. Looking at a long-term holding, Avinash, is this a good stock to continue to hold?
Yeah, I think KRPL is a very leading player in the rice market, and I think recent reports suggest that globally there's been a big shortage of non-basmati rice, and the government has also banned non-basmati rice, from the country. That has actually resulted in elevated prices. My sense is that KRPL should be held on if the investor has a time frame of at least 12 to 15 months. We believe numbers should get better over the next couple of quarters. So I think from a longer term perspective, I think one can accumulate here. And if the investor is already holding the stock, I think he should definitely hold on. Better numbers can be expected in FY20.
Kunal, this next query is from Imran from Kolkata. They are holding 100 shares of GRM Overseas at 195 rupees and Somani Ceramics at 749 rupees. Are they good companies to continue holding, or should they get out of both these stocks?
Well, GRM Overseas, I don't track it, and I was looking at the charts. Nothing exceptional for the charts for the stock price. A lot of an illiquid kind of a counter is what I can sense. So I would suggest an exit on stock and not to look at it even from a long-term play. Somani Ceramics could be a good stock. The stock has done reasonably well on the long-term basis, recovered very smartly from the 2020 lows of sub 100. Even the previous lows for the stock price in the month of March 2023 was sub 500 mark, and it's recovered more than 50% from those levels. So which means it's a good quality stock. You should continue to hold on to this name.
Right, Avinash, Gopinath wants to understand your views on Ashok Leyland. Stock has done reasonably well. What's your sense now at this price?
I think, Ashok Leyland, they should do extremely well, considering that the CV cycle is doing extremely well. In fact, with a lot of corporate capex happening, infrastructure spent by the governments, the commercial vehicle sector also this year should grow by about 25 to 30%. And Ashok Leyland has a large market share in the southern markets. Plus, they have a large exposure in the defense markets. And recent numbers which came out have actually clearly stated that not only margins but volume growth has also been quite encouraging. My sense is that the stock has jumped quite significantly from around 140, 45 levels to 180. Now the next re-rating trigger would obviously be the kind of quarterly performances which come on. You could look at a target price of around 210 to 220, but I think you need to keep a time frame of at least 12 to 15 months here. So long-term prospects are good, but I think for some time the stock would consolidate, and if the investor has already got these shares in his hand, he should hold on. I think keep the time frame of at least 12 to 15 months to get a decent risk reward.
That's the view on Ashok Leyland. But on that note, viewers, we're going to sip into a very short break. But don't go anywhere. We'll be back and we will be taking all your stock-related queries even after the break.
Welcome back. You're watching Buy Now, Sell Now on ET Now. Let's quickly take it to the queries. Ajay, Kunal, Ajay wants to know whether Manappuram is a good buy at the current price, whether he can expect good returns, as well as he's taken up your advice with regard to PFC, holds it at 200 rupees a piece. What should he do now? So those couple of questions from Ajay.
That's great. Congratulations. I think the stock is at 250 levels and you're reaping very good benefits on PFC. So I would still suggest a hold. I think the momentum is not fading into these stocks. PFC, REC, both of them are moving in tandem. You may have those odd corrections in between, but then I think if you've managed to hold on to the stock, at a point of a classic breakout, then you have a lot of buffer as well as cushion in your favor. So I would suggest a hold. For Manappuram, I would believe that the stock is nearing a breakout. So the timing also could be for Manappuram could be a lot more precise as well as right at current zone. If this breakout is successful for the stock price, I would expect the stock to come back towards at least 180 over the next 6 months or so as a time frame. So even this stock could be an interesting play. The only catch with Manappuram's, if you're trying to compare this with PFC, is that Manappuram is a slight high beta name. So the stock can get into those odd phase of correction. We saw some news flow coming out in Manappuram a couple of months back, and that had an adverse impact on the stock price. So that's the only catch with a stock like Manappuram. But other than that, purely in terms of chart structure, it looks very attractive.
Okay, Avinash, this next one is coming in from Kiran from Bangalore. They are a long-term investor. They are holding Infosys at a price of 1,404 rupees. Now, obviously, they are incurring a loss right now. What should they be doing with this? Should they continue to hold it or maybe sell out of it now?
I think we need Infosys. If the view is longer term, then I think they should continue to hold. Although the first quarter numbers were below expectations, the company has cut down its guidance. But I think the company has a very robust order book. It's got a very strong balance sheet, and most importantly, we believe that in the second half of FY24, we could see some visible tailwinds and possibility of some reversal signs in the IT global market. So my suggestion is that they should take a long-term view and don't get panicky in the short term. The growth numbers will definitely improve over the next, say, 1 or 2 years. So continue to hold.
Kunal, we have Lakshmi Narayan who holds BHEL, wants to understand whether to continue to hold it or sell it. Of course, the stocks run up in recent weeks. He has a holding period of 6 months in mind.
Well, then you can continue to hold on. My short-term targets for BHEL were closer to 100. The stock has crossed those levels. What you can ideally do is maybe trail your stop losses depending on your purchase price. So assuming if your purchase price is 90 or sub 90 levels, then I believe that 95, 96 could be a good closing based trailing stop loss for BHEL, and you can continue to ride the trend on the higher side. If the trend sustains like what we've seen so far this month for BHEL, then I believe that you could probably expect another 7 to 8% on the upside. So maybe closer to 110, 112 could be a very near-term target which you can keep for BHEL.
Avinash, Rima has a query on Bajaj Finance and Finserv. Now, they said that they're making a profit of more than 10% currently on both these stocks. But, why are the shares falling? They want to know mainly given fundamentally that the numbers were in line with estimates. So, why have they been falling and should they continue to hold both these stocks?
Yeah, I think really numbers have been pretty robust and in line with market expectations. But I think the market is obviously worried about the fact that Jio Financial is going to enter the market and create a lot of disruption in the financial services space, and that could mean that Bajaj Finance, Bajaj Finserv, which is the holding company, could see a lot of competition. In fact, this is not only applicable for Bajaj Finance but a lot of other NBFCs. So I think in the coming quarters, we could see a lot of competitive pressures coming in. But let me tell you that Bajaj Finance has a very robust kind of AUM. They've got a large customer base. So I think it's a matter of time before they actually gear up and bounce back. So I think if the investor has a long-term view, then I think a 10% upside is not something significant for Bajaj Finance. I think the re-rating of the stock could definitely happen, but you'll have to wait in for at least the next 12 to 18 months before we see the impact of Jio Financial on the overall markets.
Right. Kunal, we have Jai Krishnan who holds 79 shares of United Spirits at $1,014 a piece. What's your view on this company over the short-term period? What is the target for this share in another 3 months or so? Anything that you can give?
Well, I would be bullish on United Spirits from a medium-term play. Now, if your time horizon, for example, is 6 months or plus, then I would believe that the recent high for United Spirits, which is around 1,025, if that gets taken out, then I believe a new trend could begin for the stock price. And on that 6-month time frame, I would probably place a target of 1180 to 1200 on United Spirits. So I think it all depends on now how the stock crosses past about the 1025 mark. So keep that as a benchmark or a breakout zone where you can look to buy the stock if in case you've not bought, or else if you've already bought and you're looking to add, then I think you should look to add only about the 1025 mark, because that could be termed as a classical fresh breakout move for United Spirits. And then from there, 6 months targets, you can keep closer to 1180 for the stock.
Okay, Avinash, this next query is from Sandeep from Tamil Nadu. Actually, they want a suggestion. They want a stock in the IT name and the pharma name. One stock that you would pick out here for the next 3 to 4 years.
I think looking at the kind of suggestion for next 4 years, I think KPIT Technologies really looks pretty attractive. They operate in the electric vehicle and the automotive global space, and I think the kind of performance KPIT has delivered in the first quarter of FY24 has been quite solid. The management commentary has been good, so I believe that over the next 2 years, if the investor has the patience and conviction, then KPIT Tech, from the mid-cap IT space, could be a very good bet, considering the fact that growth numbers are going to get better and better for the next 2 years. So I think this could be a good buy even at the current odd levels, provided you keep in a time frame of at least if 18 to 24 months.
Right, Kunal, let me take it over to you. We have our Mundada from Pune. He wants to understand with regard to, we have seen a bit of buzz around pharma of late. So he wants to understand Novartis, what your views are, as well as if not Novartis, what should he look at over the short term in pharma?
Well, I think there are plethora of options in the pharma pack as of now. Now, my only concern is the last part of your statement, which is short term. I don't expect anything materialistic to come back into these pharma stocks from a short term. In fact, there could be a possibility of many of these pharma stocks actually going into a corrective wave. And the rationale for that, according to me, is most of the pharma stocks in the pharma index have actually hit the overbought nature on the daily charts in terms of indicators, momentum indicators, and that could probably call in some sort of a cool off or price correction or a moderation for at least the next 2 to 3 weeks for many of these pharma names. So the only concern is short term. If your horizon is something which you can extend to say 6 months, 1 year plus, then I would believe look out for stocks like Sun Pharma, even from current levels. Glenmark Pharma, if the stock corrects towards 720, 730 mark, keep that as a stock which you can consider buying the stock at those levels. Granules, you can consider buying the stock at 315 odd mark, which is the breakout point for Granules. So there are a lot many options, but then buying on dips could be a better strategy, as well as you're tweaking your time frame from short term to medium term.
Avinash, the next query is from Ravi, and this one is on NTPC. Tomorrow, yes, NTPC will be reporting their numbers, but they are holding 2,000 shares at a price of 201 rupees. Should they continue to hold or sell?
I think NTPC should report pretty decent numbers in quarter one of FY24. And I think looking at the generation capacity plus the additional expansion which the company has put in, my sense is they would also get the benefit of this incremental throughput in FY24. The stock has risen quite sharply, but I think power generation is the flavor in the market, and I think NTPC is a well-established player here. So I would suggest they continue to hold. The next 12 to 15 months outlook looks pretty promising, so I would suggest a hold.
Right, let me take it back to Kunal. Kunal, Govardhan from Bangalore, 200 shares of Finolex Cables, wants to understand your views. Also holds 6 shares in Paytm since the IPO. That's an interesting one. We do have Paytm even on the fundamental piece. We've seen a lot of brokerages upgrade their target price on Paytm. What's your sense?
So Finolex Cables, you can continue to hold on. Very good chart, steady performer over the last many years. Looks attractive, as a chart even at current levels. Paytm could be a bit intriguing because the stock in the last 3 or 4 months had seen a very good recovery. I think if I'm not wrong, it was almost at 500 or 550 levels at the start of this year or end of the previous year. And then it moved down to, I think 900 if I'm not wrong. So there was a very decent recovery for Paytm in this last 3-4 months odd for the stock price. But this last 1 month of correction has actually led the stock breaking below the 50-day moving average. This could probably be maybe a short-term change of trend for Paytm. I would expect a further correction possibly towards 650, 660 marks. So if you're looking at a better buy, in case if you're looking to average your existing holdings, then you can buy closer to that support range of 630 approximately.
Right. Kunal, one more your way, and this one is from Anant from Hyderabad. They're holding Nippon India 1,500 shares at 285 rupees. What should be the short-term target for this now?
So I think at 320, 325 where it's trading, it's a good zone where you can look to actually book out profits, because the stock has this very odd tendency of going into a 20%, 30% kind of an average rally, and then seeing a correction which is at least 10% to 15%, if not more. We've seen this multiple times for Nippon India. So I think at 320 odd levels, I would advise to book out profits. If not 100%, then at least 50% or more should be taken out at current levels.
Right. Avinash, let me take it to you. We have Thomas George from Kochi, who holds 1,000 shares in GMR Infra for the last 12 years. Yes, you heard that right. He's bought it at an average price of $44 a share. He wants to understand what the future prospects of the company are, whether he should hold or sell, and whether he can add further, if at all.
I think he should hold on to GMR Info because, I think they operate in a very niche space, that is airports. And I think looking at the kind of opportunity for airports over the next 3 to 5 years, I would believe that this company is now on the right path for growth and profitability. As far as his holding period is concerned, I think he has waited patiently for 12 years. But I think the next 2 to 3 years, if he continues to hold, I think he could expect a very decent risk reward. Most importantly, there are news reports that this company would offer some strategic stake to foreign investors. And if that happens, then in the near term also the stock could get re-rated. So would suggest a hold, but I think keep a time frame of at least a couple of years before he gets a decent risk.
Kunal, next query is from Pratiksha from Muscat. She's holding Techno Electric Engineering, making a profit of 20% there. What is the target that they should keep for the next 3 months if they're looking to hold it for 3 months time period? And if not 3 months, should they actually book out profits now? What's the view?
Well, this is the first month of a strong breakout for the stock. I think if I'm not wrong, it's trading at 490, 492 right now. So the first month of a strong breakout. Now, ideally in such kind of a scenario, we expect a multi-month up move. But then this breakout is coinciding with a point where the markets are getting into a moderate zone, which means that there could be a possibility that these breakouts may see a retracement before the stock gets ready for another up move. In these kind of scenarios, it is always better to book out 50% or more profits at current levels and then wait out for a correction. So in case, for example, if the stock corrects towards say 450, 445 mark, that could be a point where you may look to rebuy what you may probably be looking to sell at current levels.
Right. Avinash, your views on Sun Pharma. We have a viewer, Dasaradhi from Vijayawada. Apologies on getting that name wrong. But he holds around 150 shares of Sun Pharma at $560 a piece. Kunal made his views clear with regard to Sun Pharma. Yours?
No, I think he's gotten Sun Pharma at a very attractive level, and I think Sun Pharma is now going to get better and better as the quarters go, because their focus has been now and will be on the specialty business, which is showing good traction and margin expansion. My sense is that this is one of those companies which has got a large exposure in the US market, plus they have a good domestic market also. But I think the specialty division business is going to re-rate the stock going forward. So I would believe that he's already made a decent amount of capital. He should book part profits and hold the rest for the next 12 to 18 months. We are looking at a medium-term target price of at least 1250 to 1300.
Kunal, Rima from Pune wants to know on Delta Corp. They're holding 75 shares at 265. Should they continue to hold or maybe average out?
Very volatile stock, and even I'm sure you must have seen the kind of news flow surrounding the stock price in the recent past, not just in the last 1 or 2 months, but over the last 1 or 2 years. There have been 2 very sharp and severe downtrends for Delta Corp. So ideally, these are the kind of stocks which you should use for trading play. In fact, I've been consistently advising this in the same strategy, that you could be looking to buy these stocks on maybe some sort of a correction, but then have a short-term oriented target, 5%, 10% kind of a target, and if those targets are met, you should ideally look to exit. So follow a similar strategy. In case if the stock sees a bounce back, that should be taken as an opportunity where you can look to exit.
Right. Let's quickly start the rapid fire now. We'll quickly, I'll start off with Avinash. Avinash, RPG Life Sciences bought at 790 by Pradeep from Kolkata. Your views on that one?
I think he should hold on. Company should post very good numbers for FY24. So I think some further re-rating is expected. Please hold on.
Kunal, Rajesh from Punjab wants to know which one to add, Lupin or Glenmark Pharmaceuticals?
Glenmark Pharma.
Right. Avinash, again back to you. MTAR Tech, 30 shares bought at 145. Continue to hold?
Yeah, you can hold on.
Kunal, Shyam from Nashik has Parag Milk Food at 245 shares at 137 rupees. What should they do?
I think we should continue to hold on. If possible, look to average closer to 150.
Right, Kunal, let me stick with you. Venkat Ramani from Bangalore, Power Grid. What's your view on this one? It's a buzzer in trade today as well.
Yeah, it's a good stock. You can continue to hold on. If you have already bought, 240 is a good support. So closer to that level, you can look to average.
Avinash Devi from Hyderabad wants to know Page Industries at current levels for the long term. Is it good to look at the stock right now?
Yeah, I think the inner market had gone through a crisis in the last 2 to 3 quarters, but I think things are now moving smoothly. Yarn prices are coming down. So looking at the next 12 to 15 month horizon, I think the investor can hold on.
Right, Kunal, and your views on M&M, because that was the other buzzer in trade yesterday.
Well, the stock has seen a sharp correction. I would not expect the stock to get into a immediate rally. I would expect further correction on M&M.
Avinash, United Spirits for the long term, Vishak wants to know they're holding 200 shares at a price of 1040. What should they do?
I think they should hold on. I think better days could be coming for the liquor and brewery companies, considering the fact that domestic consumption has gone up and United Spirits is a leader in the liquor space. So I think continue to hold.
Right, and Avinash, what are your views on Indian hotels at the current market price? Significant run up in the stock from those lows of 2021. What's your sense now in terms of valuation?
No, I think I would believe that this stock has got further legs to further get re-rated, considering that we'll be having World Cup this year, the G20 summit. So I think further re-rating is possible. So I think continue to hold.
Okay, and that was the last query that we were going to be taking on the show today. Thank you so much, Avinash, for joining in with us this morning on Buy Now, Sell Now. But with that, viewers, we're going to slip into a very short break. Don't go anywhere. We'll be back with more updates after this break. Welcome back, and you're watching Buy Now, Sell Now on ET Now. It's Friday. We have not forgotten that, and hope you have not forgotten that, because we have a BNSN Pathshala for you all. And Kunal, as always, is here with us with an exciting understanding on one of those technical terms that we don't understand. Bullish engulfing candlestick pattern, Kunal. What does that mean? What does it indicate? What should one be seeing there?
Thank you, Vinny, for that. So bullish engulfing pattern is a very frequently seen and a strongly relevant topic for technical analysis, and it generally helps to spot the start of a fresh reversal or a positive trend for the index or an asset class. Now, over the last many Pathshalas, I've been discussing more stocks, but this time I've actually taken few sector charts to try and indicate that how do you actually spot the start of a major positive trend. So this is a very simple example of how the bullish engulfing pattern goes about. The stock on an existing basis goes into a downtrend, as you can see on the red candlestick line. All of a sudden you see a green candle which engulfs the price action of the previous red candle. So as you can see that the body of this candlestick pattern on the red side, the negative candlestick pattern, gets completely engulfed by the body of this positive candlestick pattern. So this is what we call as a bullish engulfing pattern, and this is generally a start of a reversal trend for the stock or an asset class. So I've taken two charts over here. The first one is apparently a chart for the Pharma index, and we all know what has happened to the Pharma index in the recent past. And we spotted this bullish engulfing pattern sometime back, I think a couple of months back. As you can see that the Pharma index was going through a phase of a rally, then came a consolidation in the month of April, and then there were two sharp weekly candlestick patterns on the downside for Pharma index. But then what transpired post that was a strong bullish engulfing pattern. So this is a positive pattern for the Pharma index, this is a negative candlestick pattern, and the body of this entire positive candlestick pattern manages to engulf the body of the previous negative candlestick pattern. What happens post that? This becomes a major base or a fulcrum support for the stock or for the sector in this case. And you see the index going into a major rally post that. We've taken one more chart for the Nifty Midcap index in this recent past, and as you can see that the Midcap index was going through a bit of a downtrend. There were many previous attempts where the Midcap index is trying to claw back, but these were all failed attempts towards the bullish engulfing pattern. The only successful one was here, in the month of March in 2023, and post the success of this bullish engulfing pattern, you saw a complete change of trend for the mid-cap index, and from a point of sub 8,500, the index has managed to rally to 10,500 mark. So that's the significance, importance, and the prime observation for bullish engulfing patterns.
Right, super interesting as always. Was completely new for me as well. Thanks so much for that, Kunal. But with that, we're completely out of time on this edition of Buy Now, Sell Now from Vinny, myself, everyone who puts the show together. Thanks so much for watching.